that's where the opportunities are, right? If you're trying to make money, how do you make money? Well, you securitize Bitcoin, or you become a banker, an investment banker or a commercial banker of Bitcoin, or you create these radical new products that have Bitcoin embedded in them, right? Or for it. And those are all very interesting.
Bitcoinzilla stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now, guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoinzilla today and enjoy the new edge. Michael Saylor talks about Bitcoin ETF options and leverage the potential of digital capital. Bitcoin's market impact. Bitcoin is traditional assets and Bitcoin ecosystem opportunities.
The general idea is, if you simply want to take a plain vanilla investment position, then you buy a spot Bitcoin ETF and you just hold it. And that's a very safe, simple, straightforward thing to do. You're taking counterparty risk to the ETF provider and then their vendors, right? You've got risk to BlackRock and you've got risk to BlackRock's custodians, and you read the filings, and you've got risk to Bitcoin, right? Those are your three risks. With an operating company, a Bitcoin miner can generate BTC yield. An operating company can generate BTC yield. If you generate $100 million in cash flow and buy Bitcoin, you'll generate a yield, right? If you issue equity at a premium to buy Bitcoin, you'll generate a yield. If you issue a convertible bond at a premium, you'll generate a yield. I mean, there's some things you could do. Like if you buy an ice cream truck company for equity and you get no more Bitcoin, but you issue a bunch of shares of equity, that will be dilutive. You'll have a negative yield, right? If we were to go and buy $1 billion ice cream truck company, we would have a negative BTC yield, right? And if you're a BTC investor, you would say, what are you guys thinking, right? So it's by the way, a lot of times people do dilutive acquisitions all the time, and no one can figure out if they're dilutive or not. The beauty of BTC yield is if you're on a Bitcoin standard and you calculate that metric the way that we've defined it, any investor, any Bitcoin maximalist investor can see immediately whether the companies they're invested in are doing rational things that increase the amount of Bitcoin per share, or they're doing foolish things that decrease Bitcoin per share, right? And so I think it's a very useful thing for companies on the Bitcoin standard, or if you're an investor that wants to accumulate more Bitcoin, because you as an operating company, you can do things to create BTC yield. An SEC 40 company or a trust probably can't, right? That if you want to understand the difference between MicroStrategy and Marathon and, say, BlackRock's IBIT and FBTC, MicroStrategy and Marathon can create BTC yield.
A recent paper from the Bitcoin Policy Institute titled "The Case for Bitcoin as a Reserve Asset" argued that central banks should adopt Bitcoin as a reserve asset to hedge against rising inflation, geopolitical risks, capital control risks, sovereign default, bank failures, and international sanctions imposed by the United States government. Economist Matthew Ferranti, the paper's author, made the case that Bitcoin is an effective portfolio diversifier due to a weak correlation between the decentralized asset and other financial instruments. The economist also highlighted Bitcoin's lack of counterparty risk as an effective hedge against sovereign defaults, including the risk of financial sanctions, which Ferranti labeled as a form of selective default impacting nations like Venezuela and Russia. Ferranti clarified that Bitcoin and gold allocations might not be the answer for every central bank. However, the nascent digital asset serves the same store of value and hedging properties as gold, particularly against rapid currency depreciation. The Bitcoin Policy Institute's paper echoed calls from presidential candidates and U.S. lawmakers to establish Bitcoin as a strategic reserve asset of the United States Treasury Department. Following former President Trump's keynote address at the Bitcoin 2024 conference in Nashville, Tennessee, Wyoming Senator Cynthia Lummis introduced the Bitcoin Strategic Reserve Bill in the U.S. Senate. The bill sets the ambitious goal of acquiring 5% of Bitcoin's total supply over time. In an interview with Maria Bartiromo of Fox News, Trump hinted at paying the national debt with Bitcoin, a nod to the supply-capped asset's power to absorb and transmute currency inflation into economic prosperity. MicroStrategy CEO and Bitcoin thought leader Michael Saylor praised the Bitcoin Strategic Reserve Initiative as the 21st century equivalent of the Louisiana Purchase. For context, former U.S. President and Founding Father Thomas Jefferson purchased the Louisiana territories from France for $15 million in 1803, doubling the geographic area of the United States at the time. Despite the popularity of the strategic reserve idea among Bitcoin holders, not everyone is on board with the effort. Cardano founder Charles Hoskinson previously argued that while the adoption of BTC as a strategic reserve asset would boost the price of Bitcoin, it would also allow state actors to influence the Bitcoin network.
Right? We can also, create negative BTC yield, right? Like we can buy a portfolio of apartments in San Francisco with billions of dollars of equity, and we can brag about what a great deal it is, but it didn't generate any yield. It generated minus something, right? So we have the option to do intelligent things or not intelligent things. And that's the counterparty risk. You're taking risks to the management team and the management strategy. So operating companies can do that. And this is an interesting metric to evaluate them. Trust companies, they can't. And that's kind of like why you want to if you want to buy gold and you want to leave it in your portfolio for 40 years, you don't want to wake up and find out that the CEO of the GLD decided to do a a junk bond to buy ice cream truck companies and speculate on whatever, because it's just too many, complications for you. So there's a place for both strategies, but I think people have struggled with the idea of how do I know what's accretive and dilutive? And BTC yield is a simple metric that we're doing because our shareholders want more Bitcoin per share, and they've said it loudly and frequently. But I also think it's a contribution to the entire community, and I think that any company that wants to pursue a Bitcoin standard would be wise to stare at that KPI and think about adopting it, because it's just a useful communications tool.
On October 24, a filing by Microsoft Corp. with the United States Securities and Exchange Commission revealed an unexpected item on the agenda for its upcoming annual shareholder meeting on December 10. Alongside routine votes, such as the election of directors, the ratification of its independent auditor, and reports on AI misinformation. One proposal stood out: an assessment of investment in Bitcoin. Interestingly, Microsoft's board recommended shareholders vote against it. As of its second quarter 2024 financial report, Microsoft held $76 billion in cash and equivalents. Its shareholders pushed the company to allocate even 10% of that to Bitcoin. It would represent a massive $7.6 billion investment. At an average price of $73,000 per Bitcoin, this would translate to 104,109 BTC, nearly 11 times the amount held by Tesla, which currently amounts to 9,720 BTC. While this figure would be substantial, it would still trail behind MicroStrategy's aggressive accumulation strategy, which has resulted in holdings of 252,220 BTC. However, with Bitcoin supply dwindling, over 80% of all BTC hasn't moved in more than 6 months, and the balance of BTC on exchanges has fallen to its lowest levels in over 4 years. A Microsoft acquisition of this magnitude could create a supply shock. Whether this will become a reality depends on how shareholders vote in December. But even the possibility has already sent ripples through both corporate and crypto sector circles. In U.S. public companies like Microsoft, shareholders vote on important decisions at annual meetings. Votes on special proposals, like the one for Bitcoin investment, are typically non-binding, but they serve as a gauge of shareholder sentiment and can pressure the company to act accordingly if enough support is garnered. A large shareholder can compel a company to consult all shareholders on specific issues, as per SEC regulations for public companies. However, the board is advised voting against the Bitcoin proposal, likely reflecting caution around volatility and regulatory uncertainty. Still, the growing demand for Bitcoin from institutional investors cannot be ignored. And do not forget to subscribe to Bitcoin Saylor. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.